We've got the management of Puravankara here to chat a little bit about the quarter gone by, their overall new projects, what their debt reduction plans are, and we have Mr. Ashish Puravankara. He's the managing director now joining in. Good to have you on ET now. To begin with, just taking a look at the results, can you tell us what led to a flat profit of 25 crores this time around, because your top line growth was pretty strong?
So in terms of sales volume, they're up 31% at 0.67 million square feet year on year. Sales value is up almost 33% year on year. In terms of revenue, stood at 455 crores, which is up about 22%. In terms of PAT, we are at 26 crores, which is again up 31% quarter on quarter. In terms of our debt to equity ratio, it has declined to 0.92 from 0.94 the corresponding period. Even in terms of weighted average cost of debt, that also is down at 10.6, which was 11.6% in the corresponding period the previous year. In terms of product mix, the completed inventory contributed almost about 60% in this quarter. In terms of Puravankara and Provident, which is our premium affordable brand, Provident contributed about 47-48% and the balance was Puravankara. So very healthy mix there as well.
Look at that, the stock price of Puravankara in the last 52 weeks, which is last 1 year, 40 rupees stock price is 160, almost 160, so 4 times. Mr. Puravankara, strong growth outline for FY18, you've shared it before as well. Give us a status check in terms of how does your new launch pipeline is looking like, because that's what the street would want to know.
So again, with RERA having sort of stabilized, with GST having stabilized, we're quite excited, confident, of good times ahead. So in that, we have about 15 million square feet of launches planned. 10 million out of which is under the Provident brand, 4.5 odd million is under the Puravankara brand. Out of the 10 million Provident, we did a launch which is close to about 1.82 million square feet, Jan 15th this year. We've already collected 500 plus expression of interest, so looking very, very healthy going forward.
Can you tell us a little bit about what the current debt levels are and what are your debt reduction plans?
So in terms of net debt to equity is down to 0.92 from 0.94. Weighted average cost of debt is down 10.6 from 11.67 the same period last year. Going forward, you may see a tad bit increase in debt, more so because of the new launches that have been planned for the construction of these projects.
Mr. Puravankara, also talk to us about the status of your existing projects in Hyderabad, and also any plan of selling any of these projects there.
So Hyderabad project has done extremely well for us. Just trying to be a little cautious, we are in fact broken it up into 4 phases. Today, happy to report that phase 1 sales were very good. We almost sold 75-80% of the first phase, thereby advancing the opening of the second phase, which today has also sold in excess of about 70%. So we've combined phase 1, phase 2, and we're calling it phase 1, and now we've opened up part of the phase 3. So the Hyderabad market continues to do well for us.
Provident was to invest 2,500 crores in affordable projects. What is the status of your foray into affordable housing?
Like I mentioned, we have a little over 10 odd million square feet of launches that are planned. So the investment, the number that you talked about is really investment into the construction of those projects, out of which 2 million square feet was launched on Jan 15th, which has been received very well. We've collected 500 plus EOIs since Jan 15th of the launch.
All right, Mr. Puravankara, we'll let you go on that one. Thank you so much for your time and good luck for your future quarters as well.